Welcome to my channel. I'm Dr. Romano. In today's video, I want to share with you how would I invest $32 billion. The reason why I picked the number 32 billion is because Sam Bankman-Fried recently, I learned about his disgrace of a mess that he created, and I wanted to make a video on how different things would have gone if they would have really thought about what they were doing. Now, the fact is that whether you're investing $1 billion or 30 billion, it's kind of the same number. Things start to be affected when you go in the trillions. So, for example, if I were able to raise 32 billion, what would I do with it? Well, there's a lot. I will also walk you through on, once I've made the money, the yearly income, how will I keep the money and increase my own wealth. I'm going to give you an example on how to start a company. I'm going to give you an example on how to keep what you make from that company for your future and multiple generations. And I want to walk you through on all different types of risk measures on how to reduce risk, okay? Please remember, before we continue the video, to press the subscribe button and the thumbs up. Please do that. I make these videos just for you, to teach you my story and the things that I know, and to help you improve your financial investment understanding. Thank you so much. The question today is, if you want to find a business concept, it's not necessary that you have to find something that no one else has done. You actually don't want to do that because there's a lot of risks in that. And so for my example, I'm going to use a funds of funds because I'm Dr. Hedge Fund. I'm a doctor of financial management leadership, and my research is all about hedge fund selection. So that's why in my case, I would create a funds of funds. A funds of funds is a portfolio of hedge funds. Does have a limitation on how much capital that they could actually have in that one funds of funds. There's also limitations on how much capital each hedge fund should have. So in a perfect world, this is what it would look like. So in my case, the first step in establishing a company is to speak with attorneys. And so what I would do is I would find a hedge fund lawyer who specializes in startups for funds of funds. That cost would be between $15,000 and $20,000 for a funds of funds. That person would create the PPM documents and all the agreements, etc., and do the filings with the state and so forth. The best place to do a business is actually in the state of Delaware to establish your LLCs. So if you're a hedge fund manager or you're a funds of fund manager, the best place legally is actually Delaware for any type of company. Because you're just starting out, and because I'm just starting out, I don't want to go with an attorney company that charges an enormous amount of money. If you look, you could actually get it cheaper for the startup fees and all that stuff. So I predict it will cost under $13,000 to $14,000 to establish a funds of funds legally. From there, you have to actually find capital and your first capital investor. So in my case, I'm looking for, let's say, someone who has $15 million or more, because of the minimum needed to generate a return and to collect the management fees and to pay for the company's expenses. But in your case, these are all things that you have to think about. How much would the initial startup cost of the company? So in my case, it's not that I actually need the money personally, or I could borrow the money, because you could actually go to the Small Business Administration and actually borrow money through them, and they will guarantee the loan from the bank. But in my case, it's a little bit different. So, and even if you do have an established company and you want to grow it even more, you could create an IPO, but you have to be really careful with that, because an IPO means you have a diluted percentage of the company. And the bigger the company gets, the more of your share of the company gets diluted. So eventually you'll only own 10%. If it's worth $1 trillion of stock at 10%, well, that's a lot of money. But remember, it's in the company. So when I thought about my career path, I am not stupid. I have so many passions, yes, but it just happens to be that my passion is making money. For my case, and for your case, you have to figure out what your passion is, because whatever you're passionate about is what you will not give up, and you will have energy to push for it. So in my case, it's been quite some time now that I first led the path on what I wanted to do when I grew up. I'm still young mentally, but I'm not young with my age. And so I had a passion in trading and in hedge funds and so forth. And so that's why I pushed my PhD on learning about that. That was my passion. Learning and reading all the information, analyzing it was easy. So in your case, you need to find something that you're really passionate about. In my father's case, he was passionate about establishing businesses. But for the long haul, he couldn't manage it over 10 years, 20 years. He just got bored. But his actual passion in life was to establish businesses, start it up, build it up, and sell it. So in your case, you need to find out what it really is your passion. For example, in psychology, we understand the word sexual thrill ride. Believe it or not, whatever you're really passionate about, somehow it's connected to your sexuality. So in my case, it's learning everything I can about people, about concepts, about whatever it is. And so that's why I completed a PhD. Now, if you have passion about literature and you get a PhD in literature, you're not going to make money. You're not going to make a lot of money. So again, it just depends what you're passionate about. Don't be upset that you're not making a lot of money. In my case, I wanted to be a trillionaire since I'm a little kid. And a trillionaire would be the next goal. So since I'm a little kid, it was all about what can I do to make a lot of money. And so that's why I focused on hedge fund selection, because hedge funds were the future, and now the future is funds of funds. And so if I had $32 trillion like Sam Bankman had, because investors invested in him because it was so easy for him to raise capital, eventually I will have investors to become investors in my future funds of funds. Right now, it's only hypothetical. So everything is a stage in life. And so my first stage was learning and improving the strategy, testing it out over 7-8 years. So now it's been tested out. And so now of course, you have to have a timing issue. So 8 years ago, it was impossible to do a funds of funds in the equities market because everybody wanted to go to cryptocurrency. And now finally, the timing's happened. The cryptocurrency market is trash. And at once again, investors will reanalyze where they should be pouring their money into. And that's the equities market, because the equities market is so expansive. You're actually owning a part of the company, or you're selling and buying an actual real asset. Whereas cryptocurrency, that's just air. As Warren Buffett said, and many other people, they were right. So again, market timing is very important when you create a product or you create an idea, such as to try to do Facebook today. Well, that's not going to happen today. When Facebook started out, that was the perfect timing for that, because there was no real platform for people to store their pictures on of their family and keep in touch with their friends and their own family. So to try to do that concept today, it's not possible. So again, in my case, I want to start a funds of funds. So in my case, if I did have $32 trillion in assets under management, how would I invest it? Well, this is how it works. For every $1 billion, you create one funds of funds. You cap it off on $1 billion, no more. You have to cap it off at $1 billion or so, because each hedge fund, so you're going to have 7 to 8 hedge funds in that one funds of funds. There is a magic number with how big a hedge fund can be. And why is that an issue? Because their returns get watered down at around 350 million, according to my PhD research. So from there, if you know you have, let's say, 8 hedge funds, 7 hedge funds, well, you don't want to get any bigger than $1 billion in a funds of funds. And so that's why I would be creating 32 funds of funds. And in each funds of funds that I would create, I would have 7 to 8 hedge funds, depending on their risk profile, to be in each funds of funds. So again, you have 7 to 8 hedge funds in each funds of funds, and you have 32 funds of funds to cover the $32 billion. And why am I talking about the $32 billion? Because Sam Bankman was able to raise $32 billion. And that's why, to me, I want to show you eventually, hypothetically, how much money I would actually make and how I would increase my own net worth. So now that you understand there's 32 funds of funds in my company, it's hypothetical, from there, I would be improving the return profile of each funds of funds. And so this is a very important methodology, because for the next 3 to 5 years, where will the markets be? And that's the focus. So you really have to analyze what you want to do and where you want to be. So even if it's your own business concept, not just mine, where you want to be. And so you need to be in the service industry and the manufacturing between 3 to 5 years. That's your market focus. So you should be focusing on manufacturing a product or something like that. In my case, the funds of fund industry is ripe. It's now, today. This will be the beginning of the expansion in the funds of funds. So market timing is very important. Once these funds of funds are generating capital, let's say it does a 20% return. I'm just using 20% for all the funds of funds. If you analyze everything, what would I do with my income? Well, my income on $32 billion, every $1 billion, that's $200 million, a funds of funds manager charges 10%. On 200 million, that's 20% of $1 billion, that's $20 million a year I will make from every billion. If you times that by 32, it's almost $500 million per year income. And when it does 30% on average, it goes up to almost $1 billion. So my personal income will be a lot of money. And what will I do with that money? Well, if you have a business that you're making money, you have to know how to keep it. In my case, I would give 30% of my total income to a private foundation that I would establish in Liechtenstein, that's tax-free. And then the other 70% of my income, not all of it, of course, but let's just do 70%. I would create a donor-advised fund here in America. And so I would if let's say I made $1 billion a year, I would take 300 million, dump it into a private foundation tax-free, and then the other 700 million, I would put it in the donor-advised fund. And of course, I still get to manage that capital, you see, because I still get to manage the private foundation capital, and I still get to manage the donor-advised fund capital, and so they would become an investor in my funds of funds portfolio. And I would make even more money. So when you talk about how to become a billionaire, well, if you have a concept, it's actually very easy. Mark Cuban said that it was very easy to make the billion, but it's very hard to keep it. In my case, I know how to keep it. You dump it in the private foundation, and you dump the rest of it in the donor-advised fund. Okay? That's why we have the Ford Foundation, the Gates Foundation, and so forth. Of course, the private foundation has to give money away every year, and so does the donor-advised fund, but we're not going to get into that in this video. But that's how you establish wealth. You have to have a concept. My concept is to create a funds of funds, And then once you make money, you have to know how to actually keep the money. And logically, how much money would I need per year to live off of? Well, only a couple $1,000,000 I would be happy with. Of course, I would have to pay tax, whatever I took. So if a couple of million, I'd probably end up with $1,000,000 of real money that I could spend. And so that's how you have to think in your business approach. I'm thinking in billions of dollars just because what the industry that I'm in, that's what it is. It's billions, it's not millions. Now, of course, if you're in a small business, then you're thinking about millions. But in my case, creating a funds of funds, because you're able to manage so much capital so efficiently, and the fact is not like I'm gonna steal it, because each funds of funds has an administrator, and I will elect that the administrator handles a great deal of responsibility. If you negotiate your contract with them, of course it costs more money, but that's just how it is. And of course the hedge fund accountant for each funds of funds, that costs money as well, but that's how it is. I would want them to do a lot more. And I would like to focus on the actual selecting of each hedge fund and deselecting of each hedge fund. For example, this past year, I had to remove one of the hedge funds from my hypothetical funds of funds, and I included a new one. So of course, you're able to do that every so often based on the contract with the actual hedge fund that you allocate capital to. Then once I have billions of dollars, let's say 15 funds of funds, and each fund of funds is $1 billion, that's 15 billion under total management, then I will create an umbrella company, and I will separate that umbrella company to go public and create an IPO. So yes, I will still own each funds of funds as the fund manager, but then I would like to create a basket of funds of funds for the basic public to invest in, because not everyone could invest in a funds of funds. In certain places, it's $2.2 million, like it is in Colorado and Wyoming, and other places it's less. And some other places maybe it's more. But you get the point on how to establish wealth. I'm using my example because I've thought about it so much. But in your case, you have to think about the fact of what you're really passionate about, and in your own mind, what really drives you. And so in my case, every time I'm pulled off of this path in finance, I'm pulled back into it somehow. And again, maybe it's God, maybe it's the universe pushing you on the path. And so whatever your path is, you need to find out. But that's what I'm passionate about, is analyzing a situation, preserving wealth, making money, selecting and deselecting hedge funds. Since I'm a little kid, I wanted to know everything possible about a hedge fund. Since the year 2000, I was a little kid back then. And I didn't just sit around and do nothing for all that time. I've really, really analyzed the situation and how to become a billionaire, how to become a trillionaire. The owner of Tesla, I'm not going to say I don't believe that he could become a trillionaire, or the owner of Amazon, Jeff Bezos. At a certain point, they're going to have competition. And remember, the Vanderbilts had an enormous company called the railroads, but at a certain point, the railroads started to go down. So every industry has a peak, a bubble, and an end. And it's just a cycle. So in my case, the owner of Tesla and Jeff Bezos, their billions of dollars that they have is in company stock. So either they pull out now and take their 200 billion or 300 billion. Yeah, they're worth that. But of course, again, they have to donate it to their private foundation if they want to keep that money. They have to donate the rest of it to their donor advised fund if they still want to manage the private foundation and all that wealth. So again, they're not really going to become the world's trillionaire. And so since I'm a little kid, that's what I wanted, to become the world's trillionaire. And so when you realize your passion in life, this is what investors should be looking for. When they analyze the returns of a hedge fund manager, what they're really good at. Not looking at their education. So in other words, people that go to Ivy League schools have a higher probability of raising capital. For whatever reason that is, doesn't make any sense, because that's really ignorant to think that everyone else is not worthy of managing capital or of a business concept. Because the fact is, the world's top 10 hedge fund managers, not all of them went to an Ivy League school. And the fact is, the best traders they didn't even go to college. For over 100 years, the most successful people, Cornelius Vanderbilt didn't go to college, Andrew Carnegie, the Phipps, John D. Rockefeller. They were shoemakers when they were kids, and they started working when they could literally use their hands and feet. So again, it's in your own methodology on how you think who's qualified or not. But the fact is, your whole methodology is incorrect. Again, asking someone their experience, like a hedge fund manager, asking his experience or her experience, again, that's very ignorant. Because what does a school brand name have to do with anything? Yes, I understand the probability that when you go to school with the owner of the supermarket chain, the largest company in America, and that's your classmate, of course you're going to have a higher probability of establishing a company or getting a job at your classmate's father's company. That's my take. Be very careful with the questions you ask, because the questions that you ask can determine your outcome. For Sam Bankman-Fried and that outcome, that was a very bad outcome that even top 10 hedge fund managers invested in him. That was disgraceful of what happened. And so to say, just because someone went to Massachusetts Institute of Technology, big deal, and the father was an attorney, okay, yeah, he got a push in life on how to do free legal documents for his son. But that didn't make sense why he was able to raise so much capital. And in an interview with his coworker, the coworker says, I don't know how you do it, but you do a great job raising capital. And he turned around in a text message, and Sam Bankman-Fried said, I tell them what they want to hear. I need to learn this on what an actual person wants to hear, because the way I think is a little different. Maybe I'm the outside of the box. Maybe I'm the Albert Einstein, whereas Albert Einstein failed basic math, but yet he created theories that lasted 100 years and will continue to last 100 years. And it was the foundation of quantum physics. So again, be careful at what questions you ask, because that will determine your outcome of the investment. And so for those people who listen to Sam Bankman-Fried and his schmeal on what he would tell investors, just like Bernie Madoff, he was a guru at raising capital but not managing it. Again, Bernie Madoff told people what they wanted to hear. So you need to be very careful with asking people where they went to school, what their experience is, and everything. So that's my take. Be really careful on that, because the questions you ask will determine whether you make a fortune or you do not. Thank you so much for watching my video. Please remember to subscribe to my channel, do thumbs up. That will really help me out. Thank you so much.